What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the Paysafe stock, who just released earnings at 8:30 a.m. in the morning. We're going to go over the good news about the earnings, the bad news, and just give an overall opinion on what I think about the stock right now. And only if you feel this video gives you a better insight on the Paysafe stock, be sure to subscribe to the channel. I'll be keeping you updated with all of the growth stocks and spec plays in the future. There's going to be a lot of good information coming out. You don't want to miss it. Let's get into the video. So number one thing, guys, I want you to realize today is a very, very nasty day in the market. I mean, look at this. Another one of those extremely red Mondays for some reason. I mean, we have over 50 to 100 companies, bleeding out red today. And of course, Paysafe right now is at the top of that list after the earnings report. As you can see here with the SoFi stock last week on August 12th, on Thursday, the day of earnings, we saw the exact same thing happen, a negative 15% drop on the earnings report with a revenue beat, a EPS miss, and reaffirming guidance. So Paysafe had a 15% drop on a revenue beat, a EPS beat, but had to drop Q3 guidance. They said they're going to see a slowdown in overall live sports activity. There's no NBA right now. There's no NFL, only preseason. I heard soccer's slowing down. So I guess the overall, sports is going to have a slowdown from what they said for their Q3 guidance, that they did a pullback of around $10 million. I believe the guidance was right around 189, and they had to drop it a little bit under 180. But they expect an amazing Q4 along with an amazing 2022 because they have been, reinvesting into the company. So as you can see here, Paysafe reports second quarter 2021 results and reaffirms the entire year outlook, even though there's a Q3, guidance pullback. Total payment volume of 32 billion increased 41%. Revenue of 384 million increased 13%. Adjusted EBITDA of $118.8 million increased by 8%. Reaffirmed the 2021 full year outlook. This was not enough to bring the stock up, guys. It was the Q3 guidance. A lot of companies have sold off for the Q3 guidance, and I believe exactly what's happening is a very few amount of institutional investors, sold out today. I believe around 5%, and it looks like the pressure is on the retail investors that is completely selling out. Of course, retail investors cannot, handle these types of drops when they see stocks go much below NAV into the $9 and $8 range. I personally did not think that this company was going to go to the, $8 range. I was okay with, dealing with the ups and downs in the nines, but, this was definitely oversold today. Think about this for a second. Amazon stock, one of the greatest growth stories all time. If you would have bought Amazon stock in 1999 for $94, guys, and you held that stock for 10 years. Imagine holding Amazon stock for 10 years, buying all the way back then. If you would have held Amazon stock for the entire 10 years until 2009, you would have made $0, guys. Take a look at that. 95 into 2009, around 90 bucks, and 1999. So 10 years of holding that growth story, you would have made $0. Guys, this company has been on the market now for not even a year. They are heavily investing in their company. They just made 2 acquisitions in the past 30 days. They announced one today and one a couple of weeks ago. These are big acquisitions. These acquisitions are going to make them a big player, in the European markets. They are planning for a massive 2022, guys. See here on the investor presentation, they are delivering the Q2 current highlights. North America iGaming volume growth of 72%. Revenue growth of 48% in Q2. Guys, they have partnerships with WinBet, Golden Nugget, FoxBet. They are just getting started. Sports betting iGaming is only live in 17 states right now, guys. There is so much, legalization to go right now. These are the acquisitions they made. The Pago Efectivo and the Safety Pay, which was just announced today, creating the leading open banking solution for Latin America, guys. This is going to get them on the map for 2022. These companies were founded in 2009 and 2070. They have 660 merchants for Pago, 380 merchants for the Safety Pay. Both of these companies have 55% compound annual growth rates. Why do you think Paysafe is buying these companies, guys? They are expected to add $60 million to Paysafe's revenue for 2022 and an additional $20 million in adjusted EBITDA for 2022. Direct marketing beginning to stabilize. Expect strong recovery in Q1 2022. As you can see here, Paysafe has been maximizing their risk to reward. They are exiting business channels that they don't see that will fulfill their growth story in the future. So they took decisive actions beginning of the year to exit a discrete set of clients. As you can see here, the Q2 revenue and adjusted EBITDA performance was at the high end of the guidance. They beat on revenue, gross profit, adjusted EBITDA, cost of service. They hit about $384 million in revenue. Digital wallets had an increase of 7% in revenue. Integrated processing had 7% increase in revenue. And of course, eCash had about 37% increase in revenue. They are reaffirming their 2021 guidance and revenue of 1.53 to 1.55 billion, gross profit of 61 to 63% gross margins. That is absolutely insane, guys. Almost $500 million in EBITDA. So the reason why the stock is dropping today, yes, a couple of institutional investors are cashing out, and of course, retail is aggressively following the sell-off. I believe maybe 5% of the overall institutional investors may have cashed out today because, they cannot hold. They want to put their money to work faster. It might have been smaller institutions. They had Q3 guidance of 360 to 375. To put into understanding, they had about 385 for Q2 that just happened today. So about a $10 million reduction on the top end of the guidance. This is not, of course, good news, but, they're still reassuring, their full year outlook. So Q4 should be very solid. But I'm telling you, these deals and acquisitions that are putting together, the legalization of sports betting and iGaming, it looks like they are going to have an amazing 2022, and the company may be finally in full force after lapping those company exits back in 2020. And guys, remember, I just showed the Amazon stock. If you would have held Amazon stock for 10 years after buying in 1999, held for 10 whole years, diamond handed, didn't look at the company at all, guys, you would have made no money on the stock at all. There was no movement in upward pricing. You would have literally ended up with the same amount of money on a 10-year hold. Guys, this company has been public for like 8 months, okay? It's just beginning, okay? Sports betting has not even begun, okay? I believe the selling is a little bit over exhausted today. I really didn't think the stock was going to drop under 9. I was very comfortable with the stock bouncing in the 9 to 10, 11 range, but man, a 16% drop on a $10 million Q3 guidance reduction because, sports, open sports in general are a slowdown, with NFL, NBA, soccer. I don't really think this is a massive reason to sell, but we know, more and more investors are short term and they do follow the selling pressure that is happening today. So if we go over to Fintel, the institutional ownership, there's still 232 institutional investors that are long this stock right now. And guys, if you look, this is updated right now. This is the 16th. You can see exactly what moves, companies are making right now. And you can see, a positive number means they're increasing their position. A negative means they're decreasing their position. Royal Bank of Canada increased their position by 600%. They now have 129,000 shares. This company sold out 11%. Jeffries sold out. CapTrust increased their position. Serengeti increased their position 124%. Alaska decreased 84%. Gazalo sold out. Nitorium held their position of 5 million shares. A couple companies cashed out today, Azora and Lee. Morgan Stanley increased their position by 194% to 760,000 shares. And also Adage Capital increased their position 35% to 2.5 million shares. So as you can see, it's a hit or a miss on institutional investors today. Some are adding and some are selling out. It looks like maybe some of the smaller ones might have been selling out today. That makes it look like there's a lot. But guys, as you can see, Some are increasing positions and some are selling out. Okay, that's part of the game. So, guys, as you can see, even with a revenue beat and an EPS beat, we've seen this happen with dozens and dozens of companies this past couple of weeks. If you don't have good, big guidance for Q3, the same thing happened with SoFi. They had to drop their guidance a little bit for Q3. And this is the exact same thing that happened with Paysafe, even on a double beat. Guys, the companies have to have massive guidance in this type of market right now, or there's sell-offs going to be happening. And then institutional investors will sell out and retail follow. So I believe this is a good buying opportunity right now. They are setting themselves up for the future in 2022. Just made two big acquisitions to get them more profitable, an additional 60 million in revenue. Those two companies are growing at near 60% compound annual growth rate. There's not much the company can do right now in the short term, if the sports is having a little bit of a slowdown for Q3. But the Q2 earnings report was very solid. You can see what can happen if this company, gets into full force. They just grew 13% revenue, which is very solid for a company this big, trading at a, 3x multiple right now at a 6 billion market cap. And only if you feel this video gave you a better insight on the Paysafe stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of good information coming out. You don't want to miss it. And I hope you have a great day.